Right now, thousands of Canadians are unknowingly walking toward a financial cliff. And the scary part, most of them have no idea it's coming. There is a deadline on April 30th that could wipe out hundreds, even thousands of dollars from your CPP OAS and GIS benefits in 2026. And once that window closes, there is no going back, no second chances, no, I didn't know. So, if you are collecting any government benefits right now, or if someone you love depends on them, you need to stay right here for the next few minutes because what I am about to share with you could literally save your retirement. Welcome back to Credit Smart Canada. I'm so glad you are here today because this is not one of those videos where we talk about tips and tricks you can use someday. This is urgent, this is time sensitive, and this directly affects real money that you may have already earned but could lose simply because of a missed form, a wrong assumption, or information that nobody told you about. So grab a pen, grab a notepad, and let's get into this right now. Let's start with the big picture so you understand exactly what's at stake here. The Canada Pension Plan, Old Age Security, and the Guaranteed Income Supplement are the three pillars that millions of retired Canadians rely on every single month. These are not handouts. These are benefits that you paid into, that you earned, that belong to you. But here is what the government does not put on a billboard. These programs have renewal requirements, income reporting deadlines, and eligibility reviews that happen on a cycle. And if you miss that cycle, you do not just get a warning, you get cut off. April 30th is the personal income tax filing deadline for most Canadians, and this date is directly tied to whether Service Canada can properly assess and continue your GIS payments into 2026. The GIS, which is the Guaranteed Income Supplement, is income tested. That means every single year, the government looks at what you made to decide how much you qualify for. If they do not have your updated tax information by the deadline, they make assumptions, and those assumptions are almost never in your favor. Here's where it gets really scary. If you are currently receiving GIS and you do not file your taxes by April 30th, your GIS can be reduced or fully stopped starting in July 2026, not in a year. Not after a review process that takes months in July. That is roughly 2 months after the deadline passes. And for seniors who are on fixed incomes, losing GIS even for 1 month can mean choosing between groceries and medication. That is the reality we are talking about here. Now let me break down each benefit so you know exactly where you stand. For CPP, the Canada Pension Plan, most people think once you are approved, you are set forever. And in terms of your monthly amount, that is mostly true. But what many people do not realize is that if you are still working while collecting CPP before age 70, your contributions could be building what is called a post-retirement benefit, and you need to make sure that is being properly credited to your account. If your employer is not deducting correctly, or if you are self-employed and not filing properly, you could be losing benefit enhancements you are entitled to. Filing your taxes on time is how that gets reconciled. For OAS, the Old Age Security Benefit, most Canadians over 65 receive this automatically once they apply. But here is what trips people up. If your income goes above the OAS clawback threshold, and for 2026 that number sits around $90,000 in net income, you will need to repay a portion of your OAS. The government calculates this through your tax return. If you do not file, they may issue a recovery amount based on estimates that could actually be higher than what you truly owe. Filing on time protects you from overpaying and keeps your account accurate. Now the GIS. This is where the April 30th deadline is the most critical and the most dangerous. The Guaranteed Income Supplement is specifically designed for lower income seniors. If your individual income is roughly under $21,000 per year, you likely qualify for some level of GIS on top of your OAS. The maximum monthly GIS right now is over $1,000 for a single person. Think about what that means annually. That is over $12,000 a year that some seniors are leaving on the table simply because they did not file their taxes, or they filed late, or they did not update their marital status, or their net income changed and they never reported it. Here is another thing nobody talks about. If your income dropped significantly in 2025, maybe you stopped working, maybe you went through a separation, maybe you had medical expenses, you might now qualify for GIS for the first time or qualify for a higher amount. But Service Canada will not know that unless you file. They are not going to track you down and say, hey, we think you might qualify for more money now. You have to take that step yourself. And for couples, it gets even more complicated. Each spouse's income is assessed individually for GIS purposes. If your partner passed away or if you separated in 2025, your benefit calculation changes completely. There are provisions for estimated income in cases like that, but you need to file the paperwork and notify Service Canada. Sitting back and assuming it will sort itself out is the most expensive mistake a Canadian senior can make. So what do you actually need to do before April 30th? First, file your 2025 income tax return. Even if you had zero income, even if you think you do not owe anything, file it. Service Canada uses that return to calculate your GIS eligibility from July 2026 to June 2027. Second, if your income changed dramatically in 2025, contact Service Canada directly and ask about filing for an estimated income review. This allows them to use projected 2026 income instead of 2025 income if your situation changed. Third, make sure your direct deposit information with Service Canada is up to date. Payments getting sent to an old account is one of the most common and completely avoidable reasons seniors miss their money. Fourth, if you have a spouse or common law partner, make sure both returns are filed. Service Canada looks at combined household income for certain calculations, even though GIS is assessed individually. And fifth, if you genuinely cannot file by April 30th, file as soon as humanly possible afterward and contact Service Canada to explain the situation. While there is no formal grace period for GIS recalculation, sometimes delays can be addressed with backdated reviews depending on your circumstances. But do not count on that. Do not gamble with your income on a maybe. I want to be really direct with you here, because that is what Credit Smart Canada is all about. The system is not set up to make this easy for you. The forms are confusing, the language is bureaucratic, and the deadlines are buried in fine print that most people never read. But that confusion has real financial consequences, and the people who get hurt the most are not the ones who are careless. They are the ones who simply did not know. So share this video. Right now, before you even finish watching, send it to your parents, your grandparents, your neighbor who is on a pension, your friend who just retired last year. This information is too important to keep to yourself. One share could mean thousands of dollars saved for someone you love. If you found this valuable, hit that like button and subscribe to Credit Smart Canada because we put out content like this every week, breaking down the complex stuff into real, plain language that actually helps you protect your money and make smarter financial decisions. Drop a comment below and tell me which benefit you are currently receiving. I read every comment and your questions actually shape our future videos. The deadline is April 30th. You still have time, but that window is closing fast. Do not wait. Take action today.